Good afternoon, Scott Redler T3 Live. Welcome to today's recap. It is Thursday, what's been a pretty long week. I would say a pretty complicated week. Week. Yeah, I could talk much. That's how things have been going for me this week at least. Anyway, we talk about the action and we talk about levels and potential of certain trades triggering and certain areas to trade against and how to navigate. And it's been a little bit of a difficult time. January's been basically the month of when things look great, you sell them. When things look horrendous, you have to buy them, and you're not getting downside follow through, and you're not getting that much upside follow through except in select places. And today was another example. We came in today, market, the oscillator, I think was like minus 35, where extremes are minus 50. We were back at the lower end of the range after coming off about 500 points in the Dow in the past two sessions. So I know I came in net short. So, I covered some, and right away everyone on friggin' Twitter is like, you're not a good short, which I'm not. Why are you covering? The range is going to break. And I was just like, you know what? If it breaks, okay, I'll be a little upset that I didn't make as much, but it's better for me to cover here considering, we're oversold, and I would rather, try and find some strong stocks like Apple, so to speak. So anyway, here's actually the cues. It's the first chart I have up, and might as well show you because this looks a lot like the same. This has been support, and it held again. Imagine that. And you had a small red dog reversal. You had a red dog reversal right here, where if you shorted below 180, okay, went as low as, 99, 96, and then came back above, and, from where it was yesterday even, where it opened, to here, big range, and maybe you navigated and traded it well, and it's still in this overall channel. So if you come back to me, with the S&P and the spiders, everyone was nudging me today. Like, why don't you want to trade some more RDRs? You're not really into it. It just happens when you're a little bit off. And I had some BABA calls, and I had some fights on Twitter with some idiots out there that want to bash anyone that tries to be constructive or trade using a system and a process with moving averages and Bollinger Bands and chart patterns. If you don't have a big research team, I'm not going to name who, but today in the morning was a little complicated because one of our stocks actually, we're not even our stock. What the hell is our stock? A stock that we follow and try and trade that was really good for us, way back when it first came public, has been trapped in a downtrend. And I think some people have made money long because you've been able to buy it at the low end of the range, but it's always failed. So in our process, we're not going out and buying, the name was BABA, every dollar down saying we're going to be right and blow up our entire accounts. We test levels versus levels. Same way we don't short when stocks are on the move. So before I go to BABA, I just want to show you. Okay, this was, let's go to the chart here. This was when it first came public. This is when stock has no memories. Sometimes it's awesome. Sometimes there's a strong trend, and that happened right here when it broke above 92. Everyone was bashing it here, and if you were short this stock for this move, you probably got put out of business, or you probably had a couple bad months, and who knows how you would have lasted. For us, we were long here, long when it broke the IPO high because there was nothing to your left, and it became a really nice trade. And then into this was extended from the 8-day, extended from the 21-day, a little bit of a caution signal, and then you had this flag where, who knows, it could have flagged and continued higher, letting the 8-day catch up, but then that outside day happened. I think you can even go to my Twitter feed. I will show you that outside day saying, okay, let's see if something changed. Then all of a sudden held one small little day, still halfway below this wide range bar in control, another small one, and then boom. That was the end of the BABA pent up awesome momentum trade. From there, this happened. Just a downtrend where you were able to buy certain ends of the ranges and you had to sell them. Yes, was there a few times here, where all of a sudden we were probably long saying, oh, look at this nice little area, came up here, could go sideways, might break 118, and didn't. You had to get out right there. And then it went lower, then came back up, and was going sideways, once again, looking like maybe it breaks this, and then it didn't. And then P.S., we don't take stock into earnings. I had some options just in case, and now this is what we have here with BABA. It's just a vehicle, and the vehicle right now is gone. It's below the 821. They can. Maybe we get a trade. I tried to point out where it broke out from last time, a little closer to 90, 92. It went as low as this 86-ish and closed okay. So we'll see if there's a trade. It's no longer the same trade it was here, and it's no longer the same short it was there. This could mark a small-term bottom or not. Who cares? But for now, you write down 90.74, and you write down the low here, 87.36. See if it hovers in here. If it happens to trade above this into the gap, maybe there's some cash flow there. That's what we will look for. If it does not have the strength to even get above this and even test that and squeeze some shorts or give you a trade, chances are this pro gap here will lead to lower prices. And that's it for Baba. That's where we stand. We're not in charge of where these stocks go. We just trade them based on our system. And again, I had some calls at 98 saying from 120 to 98, maybe the earnings will be good. It's a coin toss because it's earnings. So with that said, we do not take stock into earnings, and do a flyer because stock could have put you out of business today if you had too much of it down, $8 or so. And, you take some options and you lost. And you know what? Because I didn't make money in the Baba options and I made some small in Apple, besides buying the stock, I was like, you know what? I like Amazon. I think Amazon's a stock that, the consensus is real negative against. It's been out of play for almost a year. Perhaps go with that. But I didn't because, when you're not feeling like you want to, flip a coin and put some money on the line, you don't do it. And right now, I'm not exactly sure where Amazon is, but Amazon is out after hours. I know Sperling did a good job trading it. Okay, you look here at the overall trend. The trend has been down since 410 here. You've had lower highs. We talked about this as being a level for momentum and went above this really quickly. Okay, so you had your quick buy after hours if you wanted to. And then this was your next threshold. And I think it got right to 340 and paused. And it could be hanging around this 330. So we'll see where it is tomorrow. We'll see if the gap overnight holds. But there was a decent trade after hours. And if you took some options, hopefully you made some money. And, if it's trading at 335 now where it is when I lost, you short some maybe against your option. So this way, your short could cover you'll limit yourself, but you'll lock in your price. If you bought the 310, some people, I know when I was looking at that, it was $8. So at 335, it's probably, $28. And some were looking at the 320s that were 4. Here it was probably 18. So you have big few 100% moves. And that's why you take options into earnings, because you can make 2, 3, 4, 500% on the equity you put out there. But that's, but you need to make that because every now and then if you're wrong, you're going to get a 0 like I got in Baba last night. So anyway, that was Amazon. As far as Google, pretty lukewarm earnings. Stock's been in a downtrend. It broke above it quickly, came back below. I don't know if it wasn't like really that weak where I feel like it could be breaking this this 490, but who knows? 490 is big support. These are some old lines I had in here that it traded through. But ultimately, you'll see what happens here. This low here is 503. I think it was down like 13 or 10 bucks, so right in there. So here's big support. We'll see what happens tomorrow. I don't think it was that bad that it's going to break that, but it could. And then you go to your weekly chart of Google, and it's been hovering here. This was 2 quarters ago or so, and this is big. If we were to trade below this 490 or 485, it could be in a little bit of trouble. You have a double top here. You have a downtrend that's been, pretty obvious, or just, there. And then it's been below the 200-day and all the moving averages. So that's why it's been more of a wait and see. So we'll see what happens tomorrow if this is priced in or not. But obviously, Facebook, a lot of searches there, stealing some of its lunch. The Android, not great. Apple's phone is so much better. Let's go to Facebook while we're talking about it. Facebook. Remember we were talking about that little wedge pattern broke to the downside and then wound up holding. You take some of these lines out of the way to see where we are now. And where we are now is, they tried selling it off a lot of times and they couldn't. So now earnings are out of the way. Hopefully their expense news is out of the way. It did somewhat of a red dog reversal in here, and now you have resistance. I don't know if it's going to be able to break above it and go to new highs within the next week or so, but at least this is still somewhat in the game. It acted well on earnings. Stocks that act well on earnings, the shorts get a little worried because who knows what's next. So this is your resistance. This is 76.88, or maybe 70. Or actually, no, I'm sorry. This is I'm a little blind. 78ish. And the next coming sessions gets above 78. Really not much in its way. We'll see what it wants to do next, but earnings are out of the way. Thank goodness. Twitter. I'm still in some of these options. This has been a little bit of a disaster. Actually, I went back in them. I was out of them, over, in the morning, and I'm like, you know what? I do have a thesis that I think that the sentiment's so poorly here, they might have something happen. Risk is premium paid. Down here at the 37s, $40 are really cheap. I went out a week after earnings, and if the earnings happen to be better than anyone thinks, and they talk about monetizing video for all their Twitter, people or this and that, perhaps you get that trade, and we shall see. Right now, price action is still saying, it's got to prove itself, but I do think that Twitter is not going to fall by the wayside and become a non-relevant company. I think at some point it gets going. So the question is, which earnings report? This one, the next one, who knows? So instead of what happened here, because this hurt. Remember Monday? It looked really good. It looked like it was going to break above this, and I think I was in tier 1.5 before that happened. Then I got out, because I'm like, you know what, it traded below a low and saved myself a nice amount of money into this, because this could have been really painful if I got a little, stubborn, so to speak. So didn't break above. When you're in a laggard stock, and this is still a laggard stock, it's still a broken stock below the moving averages. So you get out of it and save yourself some money. So down here into support, bought a little calls. Same thing went with some of these cyber stocks. I've been trying to buy them, and there have been laggard names, and FireEye I had also on that Monday, and I think I stopped myself out when it was down only 60 cents. Okay, and I haven't touched it since, and rightly so. Okay, this looked good. Didn't this look good? Didn't this look like it was ready to break out? Didn't it look like this trend was going to change? Finally above all the moving averages. You look sideways and you look at this long channel. Institutions, some people were accumulating the what out of this thing, and I had a lot of it going into this, and then you had the down move, and when it broke this low here, because that's what I was giving myself a stop at, I got out. Broke it, and then later in the day I felt a little bit like a jerk because I sold it here, came back up. I'm like, oh my goodness, am I going to have to buy this again above 35.80 just in case it really goes? So I didn't, and then that happened, and that happened. So out of the way. Not a clean trade. We've been seeing this for a while. It still hasn't broke above this channel here. So if it's not going to have commitment, you don't have commitment to it. CYBR. It too hasn't really done much. I've tried it a few times. This was a great trade here, okay, when it didn't have any memories, when it broke out and then it came up and gave you a good gap on earnings. Here, tried again, and then now it still hasn't been able to break above its descending channel. So every time I've tried it, I've lost a little and got out of the way, and you lose peanuts. The reason why you do it a few times, because sometimes you get that really big move in a new issue or whatnot, like you saw way back here with G-Pro. Okay, remember that 4-day move, and then it went sideways, and finally when it busted above this, look what happened. Gave you a great move above the 8-day, all the way almost as high as 94. So from 45 to 94, followed the 8-day, was a great trend. Great momentum name where you could buy higher and sell higher. I remember this day when it broke above this. It was awesome. Okay, then it changed. Changed right there. Broke the 8-day. It no longer was a pent-up, awesome momentum trade. It became, just visit and revisit, love it and leave it. And it turned into a mess with lots of trades along the way, and it's still a mess. So at this point, not much to do here. Looked okay, and then what happened here? You had a small red dog reversal. I know Mark was playing it the other day. I yelled at him because he was like all upset that it pushed through and failed. They go, that gets you out of the stock. It's broken. It's below all the moving averages. It's not above it like it was here. So let's see what happened to oil today. Oil, small reversal. That's what I guess helped a little bit too. I can't say, you could hang your hat on that. It's still below everything. What did the XLEs do? It was very weak and then tailed. If you got out of it when it broke 76, you made, you did well. If you got short here, it was down a lot today. You could have made some money before it came back up and maybe you covered. Still in a big time downtrend. It's been in this downtrend all the way from here. Listen, you didn't have to be a genius knowing that oil was going to go to 30, but if you were following the XLEs and when it broke the 8 and 21 day there, could have given you a clue to get out of Dodge. And then when it came here and came back up and couldn't get back above it, another clue. And then if you said, I want to wait for confirmation because I love these names, they give me a dividend, you should have waited till it got to the 200 day below it and couldn't reclaim it, and you've been able to avoid this pain ever since. And then you've had some small little areas to do little trades, like this red dog reversal here that wound up failing there. So lots to do. It's not the easiest environment. These ranges that don't break when you get to support for the 6th, 7th time, in the same way, you dilly-dally or you shoot all the way back up to resistance, squeezes people out of their shorts. I don't think anyone is killing it unless you're paper trading and just yelling at the TV set and ranting all day on Twitter and saying what you do and not really doing it because it's a little easier when you're not psychologically having skin in the game. But whatever. You go to the spiders. You look here. Overall, just another red dog reversal. I covered a little bit well when it broke below this prior low, but I did not get long like I usually do. I was a little off my game this morning, and we'll see what happens the next time. This is what we got to look for now. Here was your sort of double top up here at 206.30. Okay, now you have a red dog reversal, and you would see if it holds lower. See if tomorrow we open up and it fails. Then it would have worked off the oversold condition. We were minus 35. Now we're probably like minus 15. Open up, we'll be at 0. Or, do we pounce back up into the higher end of the range? But overall, this is a head and shoulders pattern, but it doesn't turn on until this breaks with authority. These necklines recently have not given way. At this point, we just bounced. So we'll see what happens tomorrow. Point of reference to see tomorrow is, do we stay above 202.30 and build? Then you have 204.29, and then you have the moving average, and then you have this. If we open up lower and the GDP is horrendous, then we'll see what happens the next time. But again, these ranges have been navigated. They've been, they're big and they're wide, and you could trade them, but not the easiest thing. This closed on the dead lows here, engulfed it, and look. This closed on the dead lows here. At least it gave you a small window to do the RDR. This actually gave you a nice longer window here, but sentiment was really bad, and I apologize for not trying to get everyone long here. I just had a few things going wrong for me in high beta land that I was just like, you know what, going to make some money short, cover it. Look to see the only thing that I could trust right now, which to me is Apple. Apple, you look what happened here. Okay, this was the last earnings report. Okay, gapped up above the range and then gave you a really nice trend, a lot higher before breaking this trend of the 8-day. Then you have another range here, gapped above it. It closed weak yesterday because the market was really weak also. Hold on, let me just get off this line. And then today engulfed it and closed above that high. So I am in long Apple, and I'm long some size, I think, for me. So we'll see what happens here. Your next spot would be for it to take out this high. This high is, let me get this off my little sticky finger. Sorry. Okay, that high here, this is 119.75. This is 119.40. This is 119.25. So here you have your gap to hold your swing long against. Okay, proved itself today that it could hold it after closing negative yesterday on the lows and closed well. We'll see what happens tomorrow. If it opens up down, maybe we could buy it for it to trade through. If it opens up, we'll see what happens. And if it trades through, because now some bears are saying, oh, well, this is going to be a double top. I think that's a low probability situation because, again, you look at Apple itself and the amount of cash it has and the buyback and the dividend, which is all going to be announced again in April. Where are we now? We're in the end of January. What they're going to initiate. You had great iPhone sales. You have the watch coming. You have so much going on. And if it was just to have the same fundamental PE as the S&P, some people are saying that's 145. And it actually is a growth name. It has a lot more potential than a lot of the other 499 stocks in the S&P. So for me, everyone knows I'm not a fundamental guy. I trade price action. I try and use different time frames. And you go back to the chart. What this tells me is you have a big gap up, pro gap that held. We're stone throw away from here. I don't know how many sessions it's going to take to get through, but hopefully when it does, it gives you, a nice move. I don't know, what this pattern says, so to speak, but if you go like this, and here's your low end of the range, which is 104. This is 120. You add 15 points to a range breakout above 119, and you get somewhere north of 135. Okay, look what happened here. This was what? This was 95 to 103, 8 points on top of 103 was 111. That was your first stop here. Okay, 110 and change before going sideways, and it gave you even more. So at this point, it's just breaking above this range, and if you want to attack on 10 points, I'd be happy to see that as well. And hopefully, just like you, I'll stay the course, and we can make a lot of money and figure out what vehicles we have to hold and trade, because as of now, there's not a lot of vehicles above the 8 and 21 day. There's not a lot of candidates that have tight patterns that could break out into new highs. So we have to just control our keyboard. Guys are making some money because some of these names are broken and it's the H sell setup and the pressing lower. Yeah, that worked for a little while too. But at this point, that's something that a lot of us aren't good at. So we're trying to just stay out of the way and figure out what's next here. And that's what we try and do every day. Figure out what's next, make some money, keep an even keel. Don't get ahead of ourselves. Don't get too down, because it's very easy. Trading is not something that's meant for everyone, and it is definitely complicated at times, and sometimes it's great. But when it's great, don't rant and rave like it's going to be great forever, because the trading gods will hear you and they might change that. So anyway, it's Thursday night. Go out for a drink. Have a nice night. I'll be in Short Hills tomorrow, and my note will be abbreviated. See you soon.